Maybe I can just start, give a quick introduction. Thanks everybody for attending DAT Summit. And so my name is Philip Lord. I'm CEO of Bitcoin Japan. We have a listed company in Japan, A105, which we pivoted after buying a stake in it and taking management control last year to be a DAT. But fortunately, we missed a lot of the about 3 months with time delays of structuring the company, and so we didn't manage to buy any Bitcoin and missed the DAT boom, and now have sort of kind of had a very early stage pivot to basically investing about 12.5% into Bitcoin, and then about 87.5% of the AUM into AI infrastructure. So we kind of unlucky but lucky. So I've got a dear friend here, Junaid Shah. He works at a small firm called Morgan Stanley. I'll let you introduce yourself.
Thank you. Well, good morning, everyone, and thank you for having me, Phil. So, Junaid Shah, I work at Morgan Stanley. I've been with Morgan Stanley for 12 years, been in Hong Kong for 16 now, a very long time. One of the questions I get asked is, why are you here? Right, it's a crypto conference. Morgan Stanley, obviously, we're a very big TradFi house, very big in the equity space. And we've been investigating ways of how we can serve our clients and our investor base, in that sort of crypto arena. And over the past couple of years, we've seen the proliferation of DATs. Now, I think DATs are a crossover from crypto to TradFi. Clearly, these are listed equity vehicles that have grown substantially, and just in terms of the capital markets business that we've been able to do with these firms, we've done convertible bonds, and we'll talk about a bit more about that a bit later on, I think, for MicroStrategy. Last year, and we actually did a large equity primary placement for Metaplanet in Japan, as well as $1.5 billion US. We're obviously very selective in what we do. We've done these 2 transactions. I'm not going to try and pretend like we've got a deep pipeline of DeFi projects and etc. that we're involved in. We're not. But I think where it's interesting is at the intersection of capital markets in TradFi as a main focus, but also Morgan Stanley being such a large wealth manager both in the US and here in Hong Kong. We've got a client base who is interested in the space, would like to get exposure, and one of the things that we're working on is how do we provide our clients exposure to the underlying assets, but also potentially funds who are active in the space. Again, there's lots of things to talk about there, including structure, compliance, transparency, regulatory compliance as well. So happy to be here, and hopefully we'll get into some of that.
Cool. What?
Thank you very much. My name is Wook Lee, CEO and founder of Edena Capital Partners. We're mostly working on the sovereign assets with the worldwide government. And we are working with the worldwide top technology partners to securitize the sovereign assets. But before, until even last year, when we talk about sovereign assets, it's a headache first because it takes a long time to review. And maybe 1 year, 2 years, and the government will change in that time and will be reset. But however, now we are living in the world where the great transition is facing right now, which is the AI. And we're trying to emerge AI with the financial rail together to securitize the sovereign assets. And we're not talking about just the billions. It can be over $1 trillion USD because if, for example, Indonesia alone have a great amount of natural resources and infrastructure and agriculture project. But however, energy project alone, Indonesia needs over 350 billion USD. And if we can securitize those assets, it's huge. And in the same time, we can protect the investors' investment with the most secured rail, which we'll be announcing today later on. Thank you.
Sounds good. Tell us more. So just give us just to dig in, give us a quick example of like an asset so people can understand, that you'd be tokenizing.
It can be any kinds of assets. So it can be natural gas, it can be agriculture project, infrastructure project, it can be a wind power, which, for example, Korea, the Norway company is coming in for the wind power, which costs over 10 billion USD, and they need the matching fund of 5 billion USD. We can even securitize that. So we're talking about okay, there have been a lot of talk about real world asset in the world, but it's the ordinary product. Most of the financial institutions don't get interested, but sovereign asset is the real asset here. So even what I see in the crypto space is that the whole market is 3 trillion USD, but whole fund and the actual market is over 130 trillion USD market that we are talking about. If just 1 to 2% move on, it goes way beyond the market. So we're trying to tokenize the world government sovereign assets.
You could do a deal with Trump. He allegedly likes doing deals in crypto. You could tokenize Greenland assets. Maybe that's something to come. That's not the deal you're announcing. Thank you. So let's just talk about valuations. It's been a great market for bankers last year in DATs. The premiums on the NAVs have come down. Where are we at, Junaid? And maybe you can just give a quick overview of the market. What do you think of valuations here?
Yeah, look, I think that that euphoria of DAT 1.0 is probably done, right? And I think we've seen MNAVs contract. MicroStrategy and MetaPlanet have gone from very high MNAVs to small premiums, and there are a number of smaller DATs out there who have are trading at essentially scratch or discounts. I think the question is twofold, and from a banking perspective, or a trader mentality, there's really two things that interest me at this point. One is for the DATs that are trading at a discount. Why are they trading at a discount? And is there a roll-up strategy that an activist investor or larger DATs could employ? And I think there's been a lot of talk about that, and there's a lot of potential M&A in that space that might occur and will occur. And then the more philosophical question is, where do DATs go from here? What is the DAT 2.0 or 3.0 strategy? And I think you talked about it earlier as well, right, with Bitcoin Japan. I think you had the right idea, you got it done, you caught the tail end of it. But I think today a DAT simply can't be an ETF alternative. I think you've really got to have some value add. You've got to be looking at how you can use your treasury to actually generate profits and yield and growth. And I think whether that's in AI, which is the thing, right? And the question is, where in that AI value chain you can be and extract value, or some other sector. I think number of people I've been talking to is energy. It's about infrastructure. Both of those sectors have a very defensive and long-term value to them, which is similar to holding, gold or BTC, right, to a certain extent. And I think, therefore, that those two sectors in particular lend themselves quite well to get married up. I think there's a lot of interesting stuff in AI. I think obsolescence time periods are so short now, right? We're seeing cool things that come out in AI, and then 6 to 9 months later, something trumps it, right? And as much as I love AI and we're using it a lot, and there's lots of money being poured into it from our firm and in every firm in TradFi, I think for a lot of these DATs for long-term planning, I think infrastructure and power is very, very attractive, and I think those two things are simply not they're going to be super cycles for quite a long time.
Tell us what you're doing, in the context of the assets and how you're tokenizing them and then going to put them into a Lisco, or what's your structure?
It's okay. We're now facing the world that in the humankind have never faced before. So it's not this topic can be repeated from the human history, but the AI have been slingshot already. So it's not reversible. We have to face it, and wave is coming. That means also for the assets, even though it's in Africa, even though it's everywhere, the world is getting merged. So it's only what I think is that what's good about we're not here to fight the AI. We are here to ride on the wave together. Then, if we can use the AI, we can extremely lessen the time of the valuation, also verification, validation, everything. And even recently from the Wall Street, when there was the financial AI announcing, there had been effect of the financial analyzing companies, right? So this, the new history is not like far away, I feel like. I feel like maybe in just 3 months, 6 months, even the world's best technology can be outdated, right? So, and if we can use this AI wisely, all the process will be shortened, and there will be the new revolution of the financial. That's what we are trying to focus on. Yes.
Actually, so you're like using AI to improve the corporate governance, the asset check, do due diligence on the sovereign asset. Yeah, would that be the way you're using it for the AI, or?
What we are trying to create is the full automation of the financial OS. So from even the verification, validation, checking the product is real. If we send a human, for example, there can be a laziness, or they have to fly there, time consuming, or there can be a bribe or data error. All the financial treasury happens from the human error. I'm the person who don't believe in human. So when we can, lessen those mistakes, then I see a good result for the.
I love it. I'm way down that rabbit hole. My son has spent like 19 hours a day on Clawbot every day since it opened. So effectively, potentially we could have like independent directors on a board, but they're an AI agent, right? Is that one thought? Yeah. Okay. I get what you're doing. Very impressive. I think that's the future. So let's talk about. What are we talking about? Yeah, let's talk about what's the next 6 months look like for DATs? What does everybody have to do? Are we buying them? Are we selling them here? How did the DAT increase their awareness and give shareholder return? How do you think?
Yeah, I mean, just to that point, it's super scary very quickly, right? As as a human being, it's worrying to hear things like that. But I think the cycle is definitely there, and whether it comes in 3 months or 3 years, I think we just got to get prepared for it. DATs over the next 6 months. Look, DATs are derivatives, right? Ultimately, it's driven by sentiment on the underlying asset, and the underlying asset has not had a great run, right? 2026. Big sell-offs across the board, including BTC, big collapse in sort of the market capitalization of crypto in general. Where do we go from here? Look, I think one thing that we've seen both in the crypto world and in TradFi is the return of volatility. Famous quote gets banded around. Everybody wants volatility until it arrives, and it's the question is. The people who can now, I think there's two camps. There's going to be people who are prepared for volatility, and they've got structures and DATs and companies that can weather the volatility, and they will thrive. And there'll be companies that, were swimming, without many clothes on, and the tide will go out. So it's, I think it's periods of times like this that you're going to see winners and losers. I think, what I said earlier about M&A, I think that's an area that could be very interesting, particularly for TradFi companies, for listed DATs, or even unlisted companies. I think we're going to see more deals get done this year. But I think all eyes are on underlying coins, right? Does Bitcoin sort of find a bottom here and consolidate and grow, or is there still a lot of weakness? And with the sharp moves that we've seen, I think from October and even this year, there've been a number of market makers, liquidity players, funds, and even retail accounts that have essentially been stopped out, right, or taken quite significant losses. And it's a question of whether that gets replenished at this point in time, or we see a period where actually volumes and liquidity remain thin relative to past So I think lots of volatility, lots of M&A, lots of winners and losers. And I think, from a trading perspective, I think personally you've got to be a little bit nimble here, and just be. It's a trader's market at the moment, I think.
Yeah, I think we haven't seen, there's not such a thing as an activist investor in crypto, right? Because there's not a lot of rights in the underlying crypto, right? But like in, TradFi, there's some I've seen, people starting to launch these, new funds on activist investment to, bring DATs to, pivot or, call it the new SPAC, or, tighten up corporate governance and, look for M&A opportunities. So I think, it's going to be, it's distressed, but it's going to be a great opportunity to buy some of these assets. What are your thoughts on the overall market here? What are you most excited about?
So the government sovereign asset will be flowing through our financial rails. But what was important for our focus on the sovereign asset was we're not mostly focusing on the ownership, because sovereign assets is government, the national asset. So there's a sensitivity on the country to lose the ownership of the national asset. So we're not going for the ownership. We're trying to securitize the profit yield model. So then there can be in the both way, government can be not losing the ownership, but securitize the profit, then they will have the investment. In the same time, for the investors, when we go for the ownership, it's risky. When the maybe government change or a political change, it's risky. So there will be the good meeting in the middle. So this sovereign assets will flowing in. But what was most important part for us, even includes our announcement today, is that sovereign asset, the data must be protected in the highest security. It's a national data. So we needed the highest secured the technology partners, which include Canton 8, also Chainlink. So all the partnership will be announcing today. So yeah, we're very excited to make forward on this and make AI version of maybe our biggest financial institution that we may make. Yes.
One of the reasons why we chose Japan, we saw the DAT boom starting in June last year, and basically we thought it was a low barrier to entry and getting a shell, and we wanted to come into our markets where we understood. So we chose Japan. It's a higher barrier to entry. Hong Kong and it had a tax arbitrage as well, and we'd seen the precedent for Metaplanet as well. But let's just talk about the geographical layout, because obviously everybody talks about the US. There's a lot of DATs out there in the US, but there's also some good ones outside of the US, right? A friend of mine built one in Poland, and I think that's probably the best performing DAT at the moment, actually. But yeah, let's just sort of talk about the landscape internationally of DATs and where you see opportunities.
Look, I think, the two biggest DATs are clearly MicroStrategy and Metaplanet, right? The most famous. They've got, almost evangelical leaders. I think, to your point about the landscape for DATs, right? What makes a good DAT, and this Polish one, which has done very well. What are the characteristics that investors are looking for in DATs? It's a combination of structure and narrative, I think, right? With most things in life, and the structure is, they've got a high corporate governance. The assets are well custodied. They've got a professional team in place. These are quite obvious things, right, that most people will consider and do. I don't think necessarily all the DATs have this in place, but many of them do. And then it's a narrative, right? The narrative is, who's leading the DAT, right? What is the story? What is the DAT going to evolve into? If you listen to Michael Saylor speaking, he's the most evangelical guy, right? So he's a person that can, inspire people in this space, and I think people will back him, and therefore his company and his DAT will have a following, until that sentiment changes. And I think coming back to perhaps the TradFi world a little bit is capital structure. A lot of these DATs have been funded through equity, but a lot of them have been funded through debt and through hybrid equity products like convertible bonds. And it's about, the levels at the capital structure that's been put in place. Like, what does a debt refinancing look like? What are the loan to values on the assets and the underlying debt of the company? Is it sustainable? Is it serviceable? What are the cliffs that are coming through? And I think the DATs, which have a very transparent structure that is easily analyzed by investors and which is conservative, are the ones that are going to thrive in a volatile environment. So whether it's in Poland or whether it's in the US or Japan, I think those characteristics are going to be universal. Outside of that, what makes a DAT successful in Japan versus everywhere else? Well, it was the fact that the tax differential between trading the underlying coin or trading the stock in your tax efficient ISA account was a big structural reason for that DAT to do well, alongside regulatory requirements in certain markets. And to be very blunt, a lot of investors do not want the the headache of opening underlying coin accounts, and where most people have brokerage accounts out there. It's just a lot easier to buy listed equity. So that's really what I think makes some DATs successful and others not so as successful.
So, maybe I can just dig into your products as well. That's great. Is it you're issuing sovereign bond, and tokenizing that? How do we look at your product, by the way?
It's mostly everything. So it can be a bond, it can be sovereign the project itself. So if the project is small enough, we merge as a bond or ETF. So there can be many various ways. But however, what we are focusing here is when we go to the government and when we talk about the technology itself, it's very hard to understand from the starting point. So I think the best technology is what we see the rails and this investment flowing very naturally in the speed of fastness, but the technology itself is underlying. So don't need to understand about technology. Technology will be done by the best technology people, the geniuses. So yeah, that's what we're preparing, yes.
I lived here in Hong Kong for 15 years, so I have to give a big shout out to Hong Kong. It feels like it's really back, I attempted to live in Singapore for 3 years, got immensely bored. This market's hot as hell. I think everybody I know has got very rich in the past year, and we thought it was over last year when we turned up. So tell us about the underlying market here. Somebody running Morgan Stanley here, you must have made a lot of money and a lot of listings and secondaries this year, yeah?
Yeah, I mean, look, it's all very public and everyone is well aware of it. Yes, it's busy, right? Hong Kong does have a buzz to it at the moment. Companies are coming through listings, primary offerings, convertible bonds. It's very, very busy. I think investor demand globally has pivoted back to China a little bit. So we've seen inflows and interest from clients, whether it's at conferences, whether it's into our products, or even through, say, wealth management products. For example, if we look at investment products that wealth clients in Asia, in Hong Kong, were investing in over the past 3 years, 80% of it were over US underlying. Right, and over the last 6 to 12 months, that percentage has dropped dramatically, closer to 50% now. So a lot more retail interest is coming back into home markets, which I think is encouraging. But look, a lot of these things are cyclical. Hong Kong, China haven't had the best 3-year run relative to, say, US markets, which have just been on an absolute tear. And whether this is now a catch-up trade and will be sustained, or this gets faded, it's still yet to be seen. We're only in month 2, right, of the year, so there's a long way to go. But yeah, the signs are very encouraging so far.
And where's your exit liquidity? Where are you going to be doing your products? What's the who's buying them?
So our first stop is definitely Wall Street, and then when we have the liquidity, we're now in the process of making joint working group with the New York Stock Exchange. So it's like a feeder model. So we securitize from the private market first, and when there's still liquidity, we'll be putting up in the New York Stock Exchange. But I want to add on what I mentioned earlier. Even tokenization, I don't want to I don't like the word tokenization, because when we go to even like a traditional finance or a government, when we say tokenization, they feel same as like it's crypto. But actually, it's just the technology behind. So it's we see as just securitizing, and all about RWA. Securitizing is security. So it's a part is coming back to 2.0. So yeah, so like that's what we are working on, and I see this as a just all the technology that can help the sovereign assets to be more capital raise from the market. Yeah, first hub is in Wall Street and then global next.
Okay.
Yes.
I get the feeling we're all fucked, like in the sense, like, you know, basically, was it the way you're saying this is like governments, like example, Dubai is now running a lot of its systems on AI. You're going to have AI agents investing in your or you're going to have the AI agents being the new AI investment bank, and then they're going to structure, they're going to list, and then the AI agents are going to invest. Is that your dream?
Yeah, so why not?
Yeah.
The car is going
Wolf-eyed.
Yeah, so all the finance can be definitely on the full automatic.
Full board members.
But I don't mean like elimination of a human decision. Let's see the pilot when we ride the plane. They don't need to do anything. It's an autopilot, but they're in the control seat, right? So that's what I think.
Okay, we are going off topic, but I've got to ask. Okay, is ChatGPT, Gemini, Kimi, you know, Perplexity? What do you think ChatGPT is going to survive this year?
It's apart from what we are focusing. We have to use all the private because the public one go to the public server. So then that's not the connection with the sovereign data. So we have to use private AI. So yeah, that's what.
I mean, look, just from a Morgan Stanley perspective, and I think TradFi in general, we're also very protective of internal data. We don't allow, you know, AI LLMs to necessarily, you know, plow through our databases and our data sets. However, having said that, we have a very special partnership with OpenAI, and we have, you know, internal ChatGPT agents that effectively we can use for certain things. You know, just from a personal anecdotal perspective, it's just really powerful, right? I've got the teams that I look after. Everyone's been tasked to use AI in their day-to-day, and I think just in the last 6 months, you know, we've seen, you know, the benefit of that come through in the work, then the output and the productivity. I don't think we're going to be replaced imminently. Well, I hope not anyway, but you know, there is definitely a lot of productivity gain that's being had. And I think, you know, as these models evolve and firms get more comfortable with their data, and I think data security is the thing, right? And how you wall that off. But as that sort of area evolves and people get more comfortable with it, I think it's just going to get more and more powerful.
Okay, again off topic, but I've got smart guys here. So, allocation of capital this year. Where do you see the hot sectors? You know, next 6 months. You know, where should we put our money?
Firstly, this is not financial advice. Do your own research, and you may lose all your money. I think what's interesting, where are people trying to get their money into? There are some very big IPOs, right, that are slated for this year. SpaceX, Anthropic, OpenAI, yada, yada, yada. These are going to be, you know, hundreds of billions of dollars market valuation, if not trillions, right? I think there's been a lot of interest from institutional investors coming in pre-IPO, a lot of retail money going into private share platforms where you can buy small amounts. And I think, you know, a lot of this year's hopes for even the banks in terms of fees, et cetera, rely quite heavily on some of these large AI space technology companies coming to market, expected probably around June onwards. So I think that's a place where many, many eyeballs are right now. Outside of that, I think it's all the usual stuff, right? So it's, you know, interesting small companies, AI-driven winners and losers. I was just actually talking on the floor yesterday. It feels like, you know, every week or, you know, every so often there's a particular sector that has a coordinated sell-off because of, you know, AI worries, whether it's wealth management stocks or whether it's education stocks or it's some other sector. And I think as investors, understanding of AI and its importance and how it works, they're going to start analyzing all these different companies and sectors and seeing who the winners and losers are going to be.
Oh, yeah. Oh, definitely in our sovereign assets, I think. But however, like there can be a numerous selection of next good investment. But however, world needs to for hedging. So sovereign assets are where actually stable, and when it's good profit, then there's good profit as well. So definitely for hedging, please come to our sovereign asset.
Cool. Well, thanks everybody for speaking today. Learned a lot, and I look forward to the year ahead, making some money.
Thank you.